10:43 start. Okay. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, run. Well, welcome to the second episode in the new era of Real Estate Chat. We're here today on the 28th of February with Ron Hoth. Now, Ron Hoth, you met on our 100th episode, and you've seen us use his various charts, and we got a couple of them today. Today, we're going to try to see into the future what the Toronto Real Estate Board is going to report next week on about Wednesday, and the results for the month we were just finishing up, February of 2025, and we'll look at it in our normal way. And at first, let's introduce Ron, who's a long-term colleague of mine. He's a long-term member of the Toronto Real Estate Board, member of RE/MAX Hallmark, and we shoot the breeze and chum around in the office. And Ron's got a swimming pool at his house. We go over there sometimes in the summer with my wife and have horse around and do stuff like that. But that's got nothing to do with what we're doing today. So, Ronnie, why don't you try and be the introducer, and I'll be the responder.
Okay. Introducing Real Estate Chat.
Do today a Real Estate Chat.
Yeah.
Maybe you start with yourself, and then we'll just after a few minutes go on to what the screen says here.
Oh, I've had my license since 1980, before most people in the industry were born, it seems, except for you. And a couple others that I know, but old enough to be a classic, I hope. And started doing graphs of my own creation to see what it would look like back in the 80s when I did got my first computer and did an appraisal course. Saw the average prices going back to 1972 from sometime in the 80s. So I always found it interesting and a good way of projecting what's going to happen short term and long term in the real estate market, and it seems to bear out every year. The same patterns exist. Robert's graphs are a much different format than mine, and he does a lot more statistical analysis. Mine are pretty straightforward, just dollars in real time, no correction for inflation or anything like that, just to show short-term, long-term trends. And long-term trend generally has always been up, even though there were some short-term ups and downs, a few downs in there, but they're all visible in the graphs. If you ride out if you ride out the short-term downs, which are generally smallish, the long-term, just shows that real estate's been a good investment for everyone that's owned some in a long time.
Well, if I may, I think that's why we do these charts, is to find out what's normal. And right now, everybody wants to know is what's happening now. Are we about to have a huge downturn in recession? Are we having a pause? Is it going to go zoom again in 2 months? What's happening next? And so that's one of the reasons why we try and talk about the real estate results and the data about sales and listings and prices in a neutral way. As I've said up here, not what someone who's hot. If someone who's hot, they want to get a good deal. If someone who's reluctant, then they're hoping that sometime in the future they can look around for a while, depending if you're a buyer or a seller. Anyway, this last week when we were fooling around with this, a few little benchmarks occurred. And the Realm is the name of the system the Toronto Real Estate Board uses now, and we talk about residential 1 or 2 kitchens. Inventory built up to 20,000. Freehold listings broke through 10,000. 416 total listings surpassed 8,000, and freeholds topped 2,000. So we're building from the regular low that happens during the Christmas holidays when everybody goes away and nothing happens. The background to February, which everybody knows, there's a worldwide uproar over a couple of wars. There's a new American administration that's got everybody in an uproar. Our federal parliament is prorogued, and a minority government is trying to do a few actions that they're maybe not authorized to do and hold a leadership race at the same time. We just had a snap, unplanned Ontario election, and we had some snowstorms. Any one of those things could have caused a downturn, a slow month, a slow 2 months in real estate. We had them all. Plus, affecting everything is this compounded cumulative CPI inflation. So that means it's actually more than that. That since 2020, we got 20% added to everything. It just out of just the money's worth less, and they call it inflation. So we start by looking at inventory. And I've got one of Ron's charts here just following up because one metric we use is months of inventory. Now, you use months of inventory quite extensively, Ron. What do
Uh,
you think is good, bad, or indifferent in terms of the number of months of inventory for like a hot market, a cool market, a neutral market?
well, I've got this one graph going back to 1990. Is that what it says there? Yeah,
That's the one there, yeah.
yeah, it's a long way back. That's when we had quite a big recession where prices declined for a long time, for several years, from 80, 88, 89 down to 95, 96 when it bottomed. We had an 18-month supply of properties on the market. They were selling
That's right.
slowly. That was
That's
the
right.
worst that shows up in any of these graphs. Um, so that was,
That either of us look at. So this one
yeah.
here, we take the 4,000, 4,100 sales and 2,000 listings, we get 5 months of inventory, which this is an inventory thing. And now we switched over to looking at inventory. Is 5 months a lot?
5 months is significantly more than it was, but that's
It's not
when
a boom. It's not a
it's
boom.
not,
We don't want a
no, not a
boom.
boom. So, and then further back, or not quite as far back, sorry, as 1990, in 2008, when we had the financial crisis in the U.S., the subprime mortgage sales and scandal in the market virtually collapsed in the States. Didn't collapse here. That was one in we had 8 months, almost 8 months supply
That's
of
it.
properties
Yeah.
on the market. That was pretty brief though. The prices dropped probably 30%, then came shooting back up to where they were over the space of a year or a little more than a year. So,
It was
and
amazing recovery then. Yeah.
yeah, so we're not
So,
near that now
yeah.
at
So it's
five
not
months.
terrible. It's half of
Yeah,
that. I think we would like to have somewhere between 4 and 2 for a comfortable market for both buyers and sellers and real estate salespeople, but it's not
yeah,
what it is right now.
no.
And I'm going to say that before we go too much further, that sales are the problem, and because of the various things that were interfering with people's decision making, that people didn't buy as much as they normally buy in February, and that's what this projection is all about. These two stars. There's January actual, which was the 23rd best January. And then here is taking the 41, 20, 40, 41, 42, which it was a couple of days ago, and plotting it. And that's the 29 of 30, so the second worst February. So that says that it was 26% worse than February of 2024, 45% worse than the 5 year average. And I think that's really where the next benchmark we're trying to meet is a month where we hit the 5 and 10 year average. So because the sales are so low, that's why with the inventory we have, we got 5 months of inventory because there's not enough sales eating them up. Do you have an opinion on that?
Um, well, I tell people the market's always good. It's just good for different people at different times.
That's a good one.
Thanks. That's my own. I think that we have high inventory and low volume of sales, so low competition. And if somebody wants to get into the market, even interest rates are a little higher than they were, but they've come down considerably. I think there's an opportunity to get in the market and hang on to something long term. And 5, 10 years from now, I think they'll be higher. Prices will be higher. People will have made money or saved money. It's money they don't have to spend to be in their house 5 years from now. And they'll be paying down their mortgages. So it's a forced savings. And I think the values will go up when the market stabilizes. A lot of uncertainty at the moment just because of what's happening, but interest rates have come down. Um, yeah, a lot of uncertainty because of the wars that we mentioned earlier. We had the most snow in many years in February, 78 centimeters, they said at Pearson Airport. So
Yeah.
that's a huge amount. That's going to slow everything down. I think it's just an opportunity to get into the market, buy something, hang on to it, pay the mortgage down, and enjoy living in it.
Right. Well, that's the immediate future. What's going to happen
Yeah.
in March, April,
Oh, in
and May?
March.
What
Yeah.
we can look at today is what happened in February. And I always make a guess about what happened to prices in the month that we've just finished. And I look at the difference between January and February and all of the years recently, going back to 1980, because that's the data that I have. And in every single one of those years was a gain. There was no losses in that month. The average in all of those years was 6.08% gain from January average price to February average price. And so because I'm going to say there were so many bad things happening that that's the absolute best that we can expect to happen this month of February. And as a worst case scenario, the minimum in those 24 years was 2.03%. So I'm going to take half of that, and that's 1.15% as the worst case scenario. And so somewhere between those two. So I plotted the worst case scenario on the graph first, and that shows that if the average price from last month only went up 1.015%, we end up with a flat number of stars here, but we're still the fourth highest February that's ever happened. And a bunch of statistics here on what it compares to the highest ever, the more recent. And then if we go down and look at the best case scenario, where if prices went up 6%, we would have the third best February. This is the fourth best. This is the third best, and there's the best case and the worst case. So I think we're fairly safe to say that the average price in that will be reported next week is somewhere between, on the low end, 1051 and 1.1 million, 1.051 million. Not really too much of a change. So is either one of these good, bad, or indifferent? I say we can only look at that by comparing what used to be. So I've used your chart again, that it's good and unique, and because you've got the prices and the sales on the same chart. You get two different scales on one side, the other side, but you can see exactly what was happening a year ago. Here it is. Sales, prices, and um, I guess these are the prices, I guess, in the red.
Right. That's the
Average
average
price
price.
is
Yeah.
red. Boom, boom, boom. And we see peaks in sales. This is the boom, boom, boom. And this is the false rally that we had in 22 when people thought that interest rates are going to come crashing down and that they should buy again. And it turned out being wrong. And the same thing happened in 24. So I guess this is 24, 23, and 22 for the peak. And now we're just about to see what's going to happen next month. I look every day at the listings and the sales. And a month ago, I better take mine because those are pretty small to read if I'm going to read them. 2 weeks ago, listing inventory, it's gone up 8%. 1 month, it's gone up 20%. 2 months, it's gone up 22%. Compared to a year ago, we're up 61%. Compared to 2 years ago, we're up 101%. And compared to 3 years ago, we're up 173%. So big surprise. Everybody knows it. Listing inventory is up because they're not being gobbled up. Many of these properties are being put on the market again and again and again and again, and they just sit there. Nobody's buying them. And if we come down and look at the sales and compare, uh, Treb sales a year ago were down by 26%. Treb sales compared to 2 years ago were down by 13%, and Treb sales 3 years ago were down by 58%. So indeed, sales are not performing where they used to in February. And as I said a long time ago, that's likely why inventory is building and why the sales to list in the months of inventory is higher than we'd like, because they're just not being gobbled up. A long time ago, we were given this, put all the peaks together and call it 100 and then see how they go. So there was 5 of them that we used. July 81 peak, October 89 peak, April 08 peak, April 17 peak, and February 22 peak. Put them all together and then let them all run out. And the only one that hadn't broken or hadn't gone back to 90% of where it was before was this one from 89 through 96. And we've sort of watched this with the red of our current market following ups and downs within these 2 channels. Now, we have to always second guess ourselves and say, okay, is this a true reading? Is this a true forecast? Or is this just we've made this prediction, and so now we're trying to find results that fit into it? But I think what we're seeing is that there could be a maximum, another 10% to go down, but not in a hurry. It's going to take a few more years. This is 3 years, 5 years out, is where the previous time took to sort of get to the bottom, and then it languished about there. Again, this is my point of view, Ronnie. I asked you to come on here and throw your 9 cents in. I think the only other thing on here is my tried and true look at affordability and the 3 components of it. And then the way I look at it when we were talking with John about what type of customers there are, buyers, sellers, buy-sell customers, and then what they're expecting to see in the future. So I don't know if we have something to say to buyers that's different than what we said last month, or something to say to sellers that's a bit different than last month. What do you see,
Well,
Ronnie?
one thing that the one thing that I've also said frequently, besides the market's always good, just good for different people, is that it's easier to buy up in a down market. We've got a market that's not as active now. Opportunities to sell, you have to adjust a price to a new level, but when you go to buy, it'll be the same thing. Whoever is selling the one you're buying will be at a lower level too. So everything will be cheaper. Land transfer tax will be cheaper, which is a big bite. Legal fees, but that doesn't, they're not particularly changed by all this. So I think it's just easier to move in this kind of market, even though people don't seem to have the confidence, just because of the uncertainty in the market, in the economy in general. But and it looks like it's going to follow the same pattern that it has every year. Sales have increased from January. People will generally want to buy and sell in the spring, early part of the year, so they can move when the weather's warmer and easier for moving, and kids are out of school, so they can transfer to new schools more easily.
Yeah, there is a lag and there is a school term. I think you're quite right in saying that we're spoiled in Toronto. Many years we don't have any snow, and so people are buying and selling and walking around with their no boots almost all the time. And this year it's not. This year we've got some other economic and other political considerations that have calmed things down. But in the long run, everything works out fine. So I don't know whether we're just being a little too philosophical rather than informative. But I think we'll find that when the Treb data from all of their sales gets compiled next month, that we're pretty close in our estimation of what's gone on and why. And then March gets a kick in the teeth as well from the spring break. Anybody with any money is not around for the second week of March, and that's when we normally see the real estate market
Yeah.
take off.
And then takes off, continues to be stronger, or not necessarily strong relative to every year, but stronger relative to the early part of the year, um, right through until May, generally.
Mhm. Well, even that's what they tell us. If you haven't got 70% of your year done by June, you're behind schedule.
Yes. Oh, yeah. Good point. I better get to work.
Uh-oh. All right. Well, we don't mean to be too long, but I want to thank you, Ron, for helping me make this recording. With you folks didn't see all the glitches and miscues that worked up to before we actually started, but with a little bit of luck, it won't be so arduous the next time. So, well, thank you for now, Ron, and we'll check in with you after the results come out from the Toronto board.
Well, it's my pleasure. Thank you. Thanks for having me. I'm going to get to work on my graphs as soon as I get those numbers.
Okie doke.
Try and beat yours to printing. Well, distribution, but yours are far more detailed than mine. Mine are all pretty simple. So,
Well, sometimes simple is easier to see.
yeah, I think they paint a pretty good picture of what's happening in the market. Just in general, but yours are far more detailed when it comes to the specifics. So
Well, you're a more straightforward guy. I
there
try
we
and
go.
make simple things complex, and nobody else likes it.
Yeah, I'm still trying to learn how to read them.
All
I
right.
think they're excellent, though.
Well, thanks, Ron. Okay, so let's both say see you later and sayonara, and we'll sign off for now.
Ci vediamo. Hasta la vista, baby.
Okay, Ron.
Later.
Bye.